paper gold and silver prices in US dollars are rallying again, thanks to what looks like the dollar index rolling over, the Fed's balance sheet starting to increase, and yields on the US Treasury yield curve starting to fall for whatever reason. Gold prices are actually above $1,750 an ounce. We'll see if they stay there. That overhead resistance level has been a problem, and silver prices are above $25 pretty soundly. So we'll see if silver stays above $25, and we'll see what happens with the next overhead resistance levels, or if they fall back down below those key levels where gold falls again below 1,750 and silver struggles to stay above 25. For a while, those have been kind of the overhead resistance levels of a trading range. But the Fed's balance sheet is going a lot higher in the not too distant future, as March was a record amount of U.S. Treasuries that needed to be sold, $372 billion. And now the U.S. federal government budget deficits, for the first time in history, are on a pace for a $4 trillion budget deficit. There will probably be an article out about this with more details and charts and other analysis out for patrons in the next couple days. It also looks like gold stocks are close to bottoming if they have not already bottomed, or at least are trying to put in a bottom, and I'll show with some charts in an article for patrons. Now, I wanted to talk about this new article that came out with Ted Butler in the last couple days. It's over on SilverSeek or GoldSeek. It's called A New Piece to the Puzzle. He released it for free, and it's about Bank of America. Now, Bank of America seems to have joined the top 4 bullion banks for amounts of precious metal derivatives, and it came out of nowhere. So all of a sudden, Bank of America went from not being involved at all in the top 4 like JP Morgan in terms of the amount of derivatives contracts, gold leases, gold swaps, silver leases, silver swaps, those types of precious metal derivatives. And now they're in the top 4. And according to Ted Butler, it's just exploded. And now Bank of America, according to Ted Butler in this article, and I put some excerpts in there, but if you want to read more in depth, the link to the article will be below the video in the information and description section, where he has other links to the actual derivatives tables and charts if you want to take a look on the derivatives websites. Bank of America now has an enormous amount of silver derivatives, and it looks like they're naked short 300 million ounces of silver. So that is freaking insane. I don't know why they would do that. Maybe they need some income. Maybe they thought it would be easy money to sell silver. Maybe JP Morgan tricked them. JP Morgan appears to be making extra money, according to the article, by leasing out the physical silver. Ted Butler claims they own a massive amount of physical silver, leasing out that physical silver for extra cash. This is dumb stuff that the bullion banks like to do, but if they're going to buy back their shares, and Bank of America just announced a new, I think, $25 billion share buyback plan, how the hell are they going to pay for that? Can they just pay for that with derivatives trades alone? Or maybe the Fed's just printing off new currency and handing it to them so they can buy back their shares so the bank stocks can all rally too. So Bank of America is now one of the 4 main banks or bullion banks involved in making sure that there is no price discovery for paper gold and silver prices in US dollars. So if you want to read more about that and all the complicated mess that is the paper precious metal markets that has no price discoveries, Ted Butler lays out the case he thinks is going on and why Bank of America all of a sudden just joined with a massive amount of silver derivatives contracts. And according to Ted, they have sold short 300 million ounces of physical silver that they will eventually have to buy back. Finally, the other news story in precious metals that I thought was interesting was that in the last week or so, a new vault in Singapore is going to be built in the next 12 months, give or take, with 15,000 tons of storage space to store physical silver. That is a lot of silver. So I don't know if it's all silver that's going to be leaving mainland China and high net worth Chinese are going to be taking their silver and having it shipped to Singapore, or it's going to be billionaires or high net worth people from all over the globe moving there. But this bullion dealer in Singapore, Silver Bullion Pte Limited, seems to think that they can go from only about 400 tons of physical silver space right now to 15,000 tons of storage space in the next 12 months. So I don't know if it's going to get filled up that quickly, but they seem to think that the demand is there for people all over the world to be moving physical silver out of their other countries and into places like Singapore. So it's very interesting. Also, it looks like JM Bullion in Texas is going to be building a 25,000 square foot warehouse in Dallas that will be used for storing silver and other precious metals. So there's going to be additional storage space for physical precious metals in Texas by JM Bullion for those of you that are interested. I don't know any of the other details, but that's all that article talked about as of now. So there is a lot of additional physical silver storage space planned. So bottom line is that there is a new player in the silver derivatives contract market, but if the Fed's balance sheet is going to keep growing, all these derivative contracts on silver are not going to slow it down as much as people think. So a lot of experts like Lynn Alden talk about real yields and yields rising, and that's not good for gold and silver, but the governments can't pay higher interest rates. So we're going to see yield curve control, some form of yield curve control. It's a question of when and not if. It may have actually already started with what's been going on in the last couple days with the yields that are starting to fall. There may have been some yield curve control by the Fed that wasn't announced publicly, where the yields on the long-term bonds for U.S. Treasuries, the long-term yields, were all smashed back down to a more manageable rate that the U.S. government could pay because it can't pay a high interest rate, knowing full well all the budget deficits that are projected, $4 trillion amount, all the treasuries that have to be sold in the coming months, and how much the Fed's balance sheet is going to have to grow, unless, of course, the Fed can magically stuff all of those U.S. treasuries either into hold-to-maturities accounts that the banks don't have to mark to market. The Fed can magically stuff them into the banking system, and it seems that the banking system is already stuffed to the gills with U.S. treasuries and can't really handle too much more. Or they start forcing these treasuries into people's retirement accounts here in the U.S. But I think ultimately the Fed will have to add, at least officially, a good amount of these U.S. treasuries to their official balance sheet, but these treasuries may actually end up in special purpose vehicles, because as of February and March of 2020, the U.S. Treasury now legally allows the Fed to create as many special purpose vehicles as they want. So these are very similar to organized crime, drug cartel, shell companies, offshore shell companies, where assets are stuffed and money is laundered. And the Federal Reserve now is allowed to do these things and stuff treasuries and God knows what other toxic sausage there. So welcome to dystopia. But ultimately, if the Fed's balance sheet does go to much, much higher levels, and the Fed's balance sheet increased in just the last week by $84 billion, the Fed's balance sheet is going to overwhelm paper price manipulation in the gold and silver markets. So that is something to watch going forward.